What's up, guys? In today's video, I'm about to be going over exactly what I was thinking of and breaking down the first trade I took in February 2025. As you can see here, I started looking at the charts around 3 o'clock because this is a final hour setup that I was looking for. So the things that are on my chart basically are this 8:30 open, which is the purple line here, and the yellow line, which is the 9:30 New York Open, as well as the midnight opening price here. So that just shows the overall direction of the day, and you can see it's really bullish. Also, you could see what recently in the PM session of this day is also bullish. So we have a lot of ground to make up to the bearish side, and that's basically why I have my bias as a shorting bias right now on Monday, obviously. This was the trade on Monday. I'm gonna indicate that here. So boom, wait, I'm gonna place this Monday, February 3rd. That was when I took the trade, and I put this here on at 3:10 because that's when I start looking to actually execute. Because the final, you usually want to enter for final macro trade after like around 3:15, but I give myself 5 minutes before that just in case there's a really good entry. But basically, what I'm looking for is a market structure shift to the downside where I can see, okay, we actually are looking to go lower, and then obviously a point of entry. And I'm going to be showing you guys how I got that in this setup. So let's advance the candles forward. We could see, okay, we have to break through this low here to start looking for shorts. So I'm going to mark this here. Boom. And you can see price going. Finally, we break below that. And what do we have? A fair value gap here that gets created. So I'm going to mark that out. Boom. So now we're at a point where we could start taking trades. And I'm still seeing, okay, this is the fair value gap that's still open. It's above here. So we're going to see if we could retrace into that. And then as you can see, price goes up and finally retrace into this fair value gap. I enter at consequent encroachment of the fair value gap, but some people enter right at the open here. But a kind of a tip is that if there's a breaker block or like an order block below consequent encroachment, it might not go all the way back to consequent encroachment since it might hit the order block and the fair value gap, and that might be enough fuel for it to go back to the downside. But in this case, you would probably enter around consequent encroachment. So I'm gonna put this like obviously I didn't enter this exact amount of contracts, but for simplicity I'm about to put one contract here. That's where I would go short around here, and I put my stop above here because that's above all the candles of the fair value gap and above this breaker or an order block here. So just above a bunch of key levels here that price can bounce back off of. Now, me where I go for my take profit is going to be the nearest liquidity level, which is here, like major liquidity, not like if there was a little one here, not, but this is like pretty major here. You could also go lower for this, but in this case, this I already caught a 3.12R, so this was a big enough, like a pretty big like setup here. I'm not gonna like force it, and I'm not gonna force going longer, basically. And also, it's because I take out my trades before 4 p.m., which is like market close. So I don't have enough time. Like price doesn't really have a lot of time to go all the way to take out all these lows, and even like these lows down here. So I have to have a reasonable target, and that was like the most reasonable liquidity target here. So that's basically why I put my targeting all the way down there. And yeah, so we're gonna break this down. What I was going through, what my mind was going through during this trade. So as you can see here, boom, we're respecting consequent encroachment. No bodies closing above the fair value gaps, consequent encroachment, which is a good sign. We get sharp movement down here, creating some fair value gaps. Well, one fair value gap actually. Let's mark it because that's what I had marked while I was taking the trade. And we're seeing if price goes back to this, and it doesn't. It closes actually below, and it directly hits our take profit. Now, if you had your take profit all the way at this low here, it would be obviously a way bigger risk to reward. But in this situation, okay, yeah, maybe it would be a good idea to have that because you're only like halfway through this macro and you already have all the way down to this first liquidity level. So now maybe you could go for this or you could take partials here. But personally, for me, a 3.12 was like far good enough, and I'm going to take my full profit to there. But let's see what would go on if you were to go for this lower level here. So we see price goes back up to this order block here, and we see a rejection candle off that. and we see the order block stays strong here and rejects these candles. So there's more bearish candles now, or fair value gap gets formed here at the bottom, and we're going to see what happens if price touches it or what happens to it. So you can see it's kind of acts as a breakaway gap at this point because we get like strong displacement to the downside with leaving this fair value gap open actually. So that's a good sign of bearish order flow. But we retrace up to this fair value gap here. We tap into it and we go back into it again. And here we're closing below consequent encroachment of that fair value gap. So which is good signs of that. And now we have another break of like continuous market structure shift here to the downside. We get another small fair value gap here. We tap into that one. Here we close above consequent encroachment, but we respect the top of the fair value gap, which is also not as good of a sign as respecting consequent encroachment, but it's at least you don't close outside of the fair value gap. We get a strong candle down here. We're basically almost there. And the next candle, we take out this liquidity. So that's basically if you were going to go for the long target here, but I went for the first liquidity that was available. But that's basically the idea of what I was looking at. Basically, I see we're super overextended in the whole day, even from midnight, the midnight open, as well as New York open, 8:30 and 9:30, and even PM session was again a bullish session. So you can see, okay, there's some like space for market to go lower here. So when we see a break of structure here and we see, okay, we're starting to go lower, we can look for a place to enter. And we know that there's a lot of volume to rebalance the market at the final hour. So that's basically what we're going for here and trying to take out like the remaining liquidity that's still on the board. So yeah, that's basically it for this video. I just wanted to get back into posting on YouTube more consistently. I have another video lined up and I'm going to try to be posting more consistently. But let me know if you guys want any other videos or you have any suggestions or any like questions you have for me. Anyways, I'm going to see you guys later. Peace, boys.